Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin has had a solid August so far, and you can now feel the excitement in the air. I don't see any major warning signs in terms of price action quite yet, and we're still comfortably going sideways in our expensive region based on how far we are from the 200-week moving average. We know Bitcoin loves to return to the 200-week during bear markets, and the more time we spend going sideways here, the more likely it becomes that Bitcoin enters the very expensive region, which to me is anything above 130,000. And this is because the more time an asset spends going sideways at a certain price level, the more investors become accustomed to that price level and slow down profit taking. You can see that very clearly here on the Fear and Greed Index. In early 2024, all it took was a 70K Bitcoin to get market sentiment to extreme greed, because it was our first time crossing that price level. In late 2024, we needed a 100 plus K Bitcoin to bring market sentiment into extreme greed because it was Bitcoin's first time crossing that significant six-figure milestone. But if you look at recent sentiment, the market was fearful just a few weeks ago with Bitcoin trading above 100K. And now we're in the greed region with Bitcoin trading above 120,000, and there's no extreme greed in sight. And Bitcoin was once again able to hold a major support level, even though so many people started flipping bearish because they were too zoomed in on the lower time frames. But so far, seasonality continues to go according to plan. We know July was green in previous post-halving years like 2021, 2017, and 2013. And it's green this time as well. And August seems to be doing the same. It was green in post-halving years like 2021, 2017, and 2013, and so far it's been green also. So my base case remains that Bitcoin will rally higher into late August and maybe even early September before any type of major correction or cycle top. And this is exactly why Monday's free weekly report was called Still on Schedule, because it makes sense for Bitcoin to maintain this momentum and head higher over the next few weeks based on everything we're seeing with market sentiment, seasonality, and price action. But it is that time of the cycle where everybody starts talking about whether or not the 4-year crypto cycle is dead. Nobody talks about this in the halving years because we still have so much room to go. But as we get closer to the end of the post-halving year, everyone starts looking for reasons to be hopeful or optimistic that maybe this time is going to be different. And of course, there's always a possibility that that could occur, but I think it's dangerous to rely too heavily on just one outcome, especially if the outcome you're hoping for is that this time is going to be different and we're going to rally for another 12 months. Bitcoin has followed this same cycle of 3 years up, 1 year down for a very long time, and we know it can't continue forever. But Bitcoin isn't even the only asset that does this. We also see it in traditional markets as well, and it's likely driven by things like the business cycle and liquidity cycle and not just Bitcoin's halvings. And we do see small fluctuations here and there. But as of right now, we do expect to continue to see this pattern repeating, but we'll be open to the other outcomes in case we see that developing. And I do expect the narratives and price targets to get crazier and crazier as we get deeper into the cycle. There's people convinced we have to go above 150K. There's people convinced we have to go above 200K because of institutions. And there's people calling for 300K plus because that's the gains that Bitcoin had in the previous cycle, and they don't want to believe in diminishing returns because they say the last cycle was interrupted early, so we're going to make up for it this cycle by going way above expectations. And those mindsets tend to get more and more common as we get later and later, and people don't want to have any type of awareness that perhaps we could be topping. So for me, I like to keep it very simple when it comes to my portfolio. I like to have a portfolio that's prepared for different outcomes instead of being all in on the market going lower and being 100% cash, or being all in that we're going to have alt season for the 200th time this cycle and be 100% in altcoins, getting punched in the face week after week. I like having a portfolio that's prepared for multiple outcomes. I have some cash because we're deeper into the cycle, and things like Bitcoin, the largest asset in this asset class, are already up 700%. But I do also make sure to maintain plenty of spot exposure because I do expect that we have higher to go, but I like to stick to safer assets with users and use cases instead of hopes and dreams, because I have found it to be so much easier to hold through a correction or pullback if you have some cash and if you're in safer assets that you know are going to come back, instead of the hottest meme coin of the week that could disappear tomorrow. And as always, if you'd like to learn more about my portfolio automation system that I use for profit taking and accumulation, as well as mental models I use to navigate this volatile market, or common mistakes I see so many investors making that become more and more common as we get into the later stages of the cycle, you can check out the Crypto Enjoyers program in the video description. But for now, things remain quite simple for Bitcoin as long as we maintain our range breakout. I don't see any major warning signs, and although we're seeing ETF inflows start to slow down aggressively, and that's more than likely due to the fact that investors are now chasing this incredible 240% rally we have seen from Ethereum. And it's hard to believe that Ethereum is already back at its previous all-time highs, and it looks like price discovery is inevitable. The FOMO and chasing seems to be in full swing here, because on Monday we saw the Ethereum ETFs bring in $1 billion in inflows in just one day. You can see how that spike on Monday completely dwarfs anything we saw previously and was more than double the highest we saw in our November 2024 Ethereum rally that peaked around 4,000. And 1 billion may not sound that crazy because we're used to those bigger numbers with Bitcoin, but even the Bitcoin ETFs were only able to cross 1 billion 4 or 5 times since they were launched. And for Ethereum to be able to do that with a market cap that's 1/4 the size of Bitcoin, it's no surprise that price is rallying so aggressively. And as if the ETF inflow FOMO wasn't enough, we're also seeing a ton of money piling into these Ethereum corporate treasuries, which are now holding almost $17 billion of Ethereum and roughly 3% of the supply, even though this entire movement started just under 2 months ago. We now have entities like Bitmine Immersion Tech holding over 5 billion in Ethereum. We have Sharply Gaming holding over 2.8 billion, and the Ether Machine, the most interesting name of the bunch, holding over 1.6 billion. And we just got an announcement that as Ethereum was hitting a multi-year high, Tom Lee's Bitmine now plans another $20 billion Ethereum raise to, you guessed it, buy more Ethereum. And just because they're planning to raise 20 billion doesn't mean they're actually going to, but the ETF inflows and traders are definitely going to be front running this raise and try to get ahead of that market buying that this entity is going to do, sending price higher. And now other companies are trying to copy this playbook with other projects. I mean, some of these headlines are something that we're truly not going to believe in retrospect. Roughly a year from now, a wellness drinks maker, Safety Shot, made a bold shift into a meme coin treasury strategy, but shareholders were not impressed. So we now have wellness drink makers piling into meme coins to try and mirror what strategy has done with Bitcoin or what Bitmine has been able to do with Ethereum. And although I see a lot of companies trying to do this with other projects, it doesn't seem to be taking hold the same way, perhaps because institutional capital as of right now only believes in maybe Bitcoin, Ethereum, and Solana, which will likely get the rotation next. But it's important to remember that these are the type of headlines you see towards the later stages of a cycle, and be careful listening to anybody saying that we're still very early. As for ETH BTC, we're getting very close to our first target at the 100-week moving average at 0.041, which also aligns with a level that has been resistance many times over for Ethereum, going all the way back to December of 2018. So the same way we consolidated a bit at the 50-week and consolidated a bit at the 20-week moving averages, I wouldn't be surprised if Ethereum ran into some trouble at the 100-week alongside that major pivot level. And if we're able to get above there, I expect us to reach the major target I have for Ethereum this cycle at the 2022 low, as well as the 200-week moving average for Ethereum Bitcoin. And I know it's very easy to get roped into the price targets, like Ethereum is going to 8K, 10K, 13K, 15K, 20K, but I think it's very hard to make good decisions when you're too set on one price. I prefer to take small profits on the way up and try to hold on to as much of my position as I can. But the good news is that a lot of the speculation happening via the ETFs and the corporate treasuries are bringing a lot of usage into Ethereum, which is getting very close to making new highs on its daily transaction count. And we can see the average rising up nicely. And this Ethereum usage is taking quite a bit of attention away from Solana right now. But the good news is Solana did hold the major pivot level we wanted to see it hold and is now just continuing to make higher highs and higher lows. As soon as we get a weekly close above 200, I would expect 260 and then 300 quite quickly. And once all of these Ethereum corporate treasuries buy as much Ethereum as they can, investors are going to be looking for the next asset with institutional demand potential. And I believe that after Bitcoin and Ethereum, it's going to be Solana. As for Solana Bitcoin, not really much to see here, pretty much just going sideways and trying to put in some higher highs and higher lows. There was one concerning news story for Solana, Ethereum, and other smart contract platforms this week, and that's the USDC issuer Circle launching their own layer 1, and we know stablecoins have been a huge use case on these chains. So if these stablecoin providers start launching their own chains and taking their users with them, that could take away a lot of the usage from some of these larger platforms. But this is going to take some time to develop, so we'll see how it changes the market dynamics once it goes live. And it is great to see Ethereum doing so well on a yearly rolling basis, now up 74% and very quickly catching up to Bitcoin here. And as I've said many times, I wouldn't be surprised if Ethereum and Solana overtake Bitcoin on a yearly rolling performance basis before this cycle is over. But a lot of that is going to depend on Bitcoin getting this break above all-time high and entering another price discovery rally that should trigger those big moves from Ethereum and Solana. For now, based on the global liquidity index, Bitcoin should be in the clear until about mid-September, and hopefully by then we'll have more clarity on whether the global liquidity index makes new highs or continues its downtrend. It's still too early to know, but we should have our answer within the next few weeks and have plenty of time to make the necessary changes. The US dollar index continues to look quite weak, but it hasn't broken down quite yet and can still continue this uptrend higher and put downward pressure on the global liquidity index. We know the market knows the Fed is going to cut rates in September and in October and December as well. But I don't believe a couple of 25 basis point rate cuts are going to make that big of a difference. And I think the excitement of investors looking forward to these rate cuts is having a bigger impact than these rate cuts will eventually have themselves, which could end up being underwhelming for the market and the economy and put downward pressure on risk assets. We know inflation is still quite stubborn with the core CPI print we received this week with a year-over-year number of 3.1%. And when you combine that with real GDP at 2.53% as an estimate for Q3, a relatively decent labor market compared to what we've seen historically, and a stock market that's making new all-time highs, alongside Bitcoin, which is getting ready to make new all-time highs, I don't think the Fed has the leeway to cut rates as aggressively as most market participants currently hope they will. But we'll see what happens and continue to monitor it as we go forward. For now, as we look forward, the federal government is still running huge deficits, now at 1.6 trillion for the fiscal year of 2025. 7% ahead of where we were by this point last year. And I expect that gap to continue to widen because this deficit trend has been getting worse and worse year after year. Exponential debt growth means exponential money supply growth and currency debasement, which puts upward pressure on our risk assets like the S&P 500 until this debt bubble pops, and definitely puts upward pressure on fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.